So what is the Fed going to do over the next 12 months? Well, our view is that the Fed's going to raise interest rates in September. They're going to raise them another 25 basis points in December, and then watch and wait. The Fed has absolutely no desire or intent to invert the yield curve and set off a process that inevitably leads to a recession. Now, why stop at 2.5%? It's really a level that is determined by the marketplace. Remember, as I just said, the Fed has no desire to invert the curve, and at present, assuming yields stay where they are between now and year end, there is only really room for the Fed to go another 25 basis points and thereby tighten the spread between funds and 2 years, which is a very important spread in terms of determining credit availability. So that funds to 2 year spread would narrow to about 30 basis points after the next 2 Fed hikes. That's enough. Could they go further in 2019? Sure. But that will depend upon the marketplace. If the market reduces its concerns about the negative impact of Trump's trade tactics on growth, and it sees that capital spending, rather than being delayed because of these trade tactics, which is a concern the Fed has and the market has as well, looking at the behavior of real yields, as well as the nominal 2-year rate. So when we look at that, if the market decides that this is a concern that is fleeting and that the economy is going to continue to expand rapidly, rapidly meaning, say, around a 3% pace in 2019, all yields will rise and therefore give the Fed the runway room to raise the funds rate further. We don't think that they're going to get that runway, at least certainly not in the next 6 months or so, simply because we believe that Trump's trade tactics will delay the capital cycle and slow growth.